2 months into 2015, and the main markets in Africa have been coping with volatility from all directions: currencies, commodities and, of course, political uncertainty. No surprises there. But where's the risk paying off? Joining us for his regular Sub-Saharan summary, Jonathan Kruger from Africa Merchant Capital. What's February been like in the region?
Michael, it's actually been fairly positive for a number of reasons, and one of them being positive earnings releases across the Sub-Saharan markets. And another reason is a bounce from the lows, especially in Nigeria, with a higher oil price coming through. Despite the delay in the elections, market participants are looking forward, and certainly in oil a big driver for the economy.
Okay. What sort of companies have been reporting? What sort of sectors have we seen that have impressed you?
West Africa has been actually fairly interesting. Outside of Nigeria, we've seen in the BRVM, which is a regional exchange, we've seen a company, Sonatel, which is a telecoms operator in Senegal, produce very encouraging results, growing their earnings over 15% and also delivering a very high dividend yield. So that's attractive for investors. If we move further south, we see that Letshego, a micro-insurance company in Botswana, has been successfully implementing its African expansion strategy, Botswana being a smaller market, fairly constrained, but it's been expanding and grown earnings over 22%. And then if we go across to the other coast on Africa, we see that the power sector in Kenya has been performing well. Kenya Power and KenGen releasing positive earnings. KenGen, in fact, growing their earnings over 4 times, while Kenya Power is up 39%. And the power story is a very interesting one in East Africa, and certainly a lot of positive developments.
It is interesting, isn't it? Because, I mean, you'd expect the problems of power to continue. What you're saying is you're seeing value in those sorts of companies. Why is that?
Yes. I think power and utilities have traditionally been seen as a slow-growing companies across the world globally, but in Africa, with the rapid rollout of power in East Africa, we've seen Kenya Power, as I mentioned, connecting homes, as well as in Uganda, we've seen Umeme performing particularly well. So these are, in fact, growth companies operating in a sector which is typically viewed as a slow utility sector.
Jonathan, when I started this, I mentioned, you know, political instability, currency problems, commodity problems, and how are you navigating between all those bits of volatility coming at you, as it were, from all directions?
Yes, Michael, it is interesting operating in these frontier Africa markets, and many people think that volatility represents risk, and it's not necessarily the case. You have to look at the underlying risk factors. And the way we at Africa Merchant Capital look at the markets is it's a risk-return trade-off. And in the markets, you are often compensated for taking risk. So what we look at is what is the potential upside on a company and what are the underlying risk factors. Yeah. And if the expected return on a company is sufficient to compensate for the risk, we'll certainly invest in that company.
Jonathan Kruger, thanks very much indeed for joining us.
Thank you, Michael.